Good morning to everyone. Honorable Ministers, distinguished guests, ladies and gentlemen. First of all, I must thank you for inviting me for this Gulf Intelligence UAE Energy Forum. And I would like to congratulate the organizers for focusing the forum on the key topic of Global Energy Outlook 2020. As we look to discuss the growth in Asia and its evolving energy needs, it is also interesting to note that UAE itself, the world's UAE is also introducing alternative energy options including nuclear and renewable, and is seeking a shift to energy mix going forward. As we look to the Asian region, we see that we are living through an incredible transformation. Growth and economic prosperity have led to the emergence of large rising middle class, who while increasing the quality of their lives, are placing increasing demands for energy to fuel their growth. China and India have been among the world's fastest growing economies for the past 2 decades. From 1990 to 2010, China's economy grew by an average of 10.4% per year, and India by 6.4% per year. Although India has been a recent slowdown, the country remains a major consumer of energy. Besides the 2 Asian giants, countries such as Thailand, Malaysia, Indonesia, and Singapore are also seeing robust growth, with 4.5% growth expected for 2013, outpassing the 3.1 global growth estimates for the year. Asia comprises about 61% of the world population and currently accounts for about 40% of global primary energy consumption, much of that being attributable to India and China. In 1990, India and China consumed only about 10% of world energy. By 2010, they represented nearly 24% of global share. By 2040, it is estimated that these 2 countries will account for over 1/3 of global energy consumption. China, which is now the world's largest energy consumer, is projected to consume over twice as much energy as the United States by 2040. The magnitude of this projected transformation and demand for energy is staggering. East Africa has become an exciting new source of hydrocarbon energy that may help meet Asia's voracious demand in the short term. More hydrocarbons have been discovered in East Africa in the past 2 years than anywhere else in the world. Onshore oil discoveries in Uganda have been followed by discoveries in Kenya and discoveries of gas in Tanzania and Mozambique. Over $1 billion is being invested by East African governments annually, with a projected annual increase of 60% until 2018 for the specific purpose of exploration and production of the abundant hydrocarbon reserves. Several international oil and gas exploration companies are entering into new joint ventures to set up advanced natural gas processing plants to deal with continuing discoveries in East Africa, including companies from the Gulf region. The UAE, along with other members of the GCC, are in a unique position to facilitate this emerging south-south energy corridor between new source of hydrocarbon energy in East Africa and the growing demands in Asia. However, the future growth of Asia cannot be driven by hydrocarbon energy alone. Our region needs an ample supply of clean, affordable energy to continue its rapid growth in the coming decades. The rising prosperity in the Asian region will have a profound effect on global energy consumption patterns going forward, and this will pose a challenge to energy planners to develop sustainable sources of energy to meet the needs of Asia. If we can see from the data and projection from the US Energy Information Administration, the non-OECD Asian region, which includes China and India, coal is of half of energy consumption, 56%, and hydrocarbon liquids are just over a quarter of the energy mix, 26%. Looking ahead to 2020, we see that coal and liquid will still play a dominant role, but the highest growth will come from nuclear energy, which is starting from a very small base, and other renewable sources such as wind, solar, biomass, and hydroelectricity, which are expected to grow at 6.6% per year, significantly higher than conventional source of energy. Even at a global level, the trends are similar. World energy consumption is set to increase by 56% between 2010 and 2040. The EIA projects that the amount of global hydroelectric and other renewable electric generating capacity will rise 2.7% per year through 2035. More than any other electricity generating source, China and India will lead the way in adding hydroelectric and renewable electric generating capacity. The liquid fuel share of the world market energy consumption is set to fall from 35% in 2010 to 28% in 2040, while the renewable share of total energy use is projected to rise from 11% in 2010 to 15% in 2040, and the nuclear share to grow from 5 to 7%. Within the UAE itself, we see an increased commitment to non-traditional and renewable energy sources, with significant investment in nuclear energy slated to come online from 2017 to 2020, and investments in the development of wind farms and solar farms. In addition, the UAE is investing 1.5 billion in power and water projects to rebalance its energy mix. Looking across Asia, we see clear signs of commitment and investments in renewable energy resources. China leads the world in installed renewable energy capacity, both including and excluding hydro, and has sustained annual wind addition in excess of 10 gigawatts for 4 straight years. Half the hydropower installed worldwide last year was in China, and solar and biomass-fired electricity are expected to grow tenfold over the period of 2010 to 2020. In April last year, Prime Minister Manmohan Singh called for a doubling of India's non-conventional energy supply from 25,000 megawatts in 2012 to 55,000 megawatts by 2017. With its location and expertise in exporting energy and its long-standing ties to the Asian region, the UAE is naturally well suited to be a central hub in the South-South energy corridor and reviving the Silk Route. Apart from capitalizing on the natural reserves that have been found in East Africa, however, planners in the UAE will need to look even further as the energy mix shifts to being a central hub in electricity transmission as well. In the infrastructure for renewable energy grows in East Africa, the Middle East, and Asia. While we anticipate a reduction in the share of hydrocarbon in the energy mix for Asia being forward, it is clear that at least in the short term, coal will play a crucial role in supporting Asia's growth. However, we all know that Asia rapidly becomes more industrial. We need to be aware that the best ways to safeguard the environment. While there is interest in promoting the use of renewable energy sources in Asia, the significant initial outlays required for building solar or wind infrastructure has deterred some of the still developing Asian nations from embarking on a large-scale public projects in renewable energy like the UAE's Masdar initiative. There is great opportunity here for investors from forward-thinking countries like the UAE to have a greatest impact. While investing in renewable energy has not always been a smart business move in the past, but the return on investment on wind and solar power has been increasing in recent years. Corporations have leading in the way in the US, with big companies like UPS pledging to shift their energy mix significantly. What will be heartening for investors to hear is that several companies that adopted renewable energy options in the US actually reported ROI of 15% or higher. It is evident that even as the energy mix shifts, there is plenty of potential for many different parties to benefit from the unlimited growth story of Asia. Thank you.